All right, guys. Hey, everyone. Today I'm ready to share a new strategy that works extremely well with a 1-minute expiration. I know a lot of you love trading on this time frame, so honestly, this one's for you. It can be a real game changer. The trade is already open on the Australian dollar against the Swiss franc. Let's see how it closes, and then we'll continue the trading session. Make sure to watch this video till the end to fully understand how this strategy actually works. All right, guys, let's keep moving in the right direction. We're looking at the euro against the US dollar, and I'm entering a buy. The key thing here is that the price needs to be above the moving average. Ideally, you want to take the entry on the next candle after the breakout, exactly like I'm doing in this case. It's also preferable to trade in the direction of the trend, although that's not a strict requirement for this strategy. Now, let's see how this trade closes. Perfect. That was a clear, high-quality example of how to identify a buy entry using this strategy. Now, let's move on and break down the next scenario. We've got the British pound against the US dollar here. On one hand, this looks like a solid sell setup, so let's execute it. There are a few key factors at play. First, price is moving in a consolidation range, and there's a real chance we could see a break to new lows. At the same time, it's important to acknowledge that this entry is against the trend. So let's see how this trade performs when it's taken counter trend using this strategy. As we can see in this case, unfortunately, the trade doesn't play out when taken against the trend. So let's look for another interesting setup so you can get a clear understanding of the conditions where this strategy performs at its best. Let's break down a great setup on the Australian dollar against the Swiss franc. I'm entering a sell. There's a clear downtrend in place, so this trade is taken with the trend. Also, notice that I'm entering right on the break of the moving average. In certain situations, this approach is absolutely valid, as long as you're confident in your analysis. And in this case, the trade closes in profit, bringing us a solid return from this strategy. I hope this was a clear, practical example for you. So let's keep moving forward. All right, guys, I've spotted an interesting setup on the euro against the Japanese yen. There's a strong uptrend in place, so I'm entering a buy. Notice the impulsive breakout above the moving average. I took the entry on the second candle, right on the high breakout. It looks very promising, so let's see how this trade plays out. Unfortunately, in this case, the trade didn't play out as expected. That happens. This is the market, and every strategy has its own statistics. The key is that the overall performance remains positive. I'm going to open recovery trades on a different asset. I'm looking at the US dollar against the Chilean peso and entering a buy. We've got a flat movement with an impulsive breakout above the moving average. After the candle closes, I take the entry. The key is to wait for the candle to confirm and open the trade on the next one. Let's see how this trade plays out. Perfect. The recovery trade worked out 100%. A solid trade. As you can see, the strategy clearly performs well in good setups, but of course, there are exceptions, just like in the previous case, and that's completely normal. Let's keep moving forward. All right, we've got another interesting setup, this time on the US dollar against the Philippine peso. I'm entering a sell here from the resistance level. I suspect that the price might touch the moving average, so this can also be used to set potential targets. Let's see if this trade idea works out, and this setup will also serve as a clear example for your understanding. Perfect. This trade also closes in profit, guys. At this point, we can actually lock in the results. I hope it's clear to you how this strategy works. Take it on board, give it a try, hit the like button, and subscribe to the channel. All right, everyone. See you next time.